This is the Inner Chief Podcast, episode 376.
The best founders we see, they're just constantly pitching. It's one of the first most important aspects of being a founder because you need to pitch for recruitment, suppliers, for customers, and ultimately for capital as well. Founders are literally pitching the business into existence. So it's one of the key skill sets, and the best founders I've seen are great at pitching their business. It's not over the top, but they're just really great natural pitches. But on the capital raise side, we'd encourage them to, again, start early, start 6 months, 12 months out.
G'day, this is the Inner Chief Podcast, episode 376, and our guest today is James Schofield, founder of Insight Investor Relations, on pitching your business, raising capital, and winning investor trust. I am your host, Greg Layton, founder of Chiefmaker and the Council of Chiefs. I believe there is a great chief in all of us, and that through listening to the stories, strategies, and techniques of great CEOs and gurus, each of you can find and leave your own legacy through your work and life. The Inner Chief Podcast is where you will learn how to think and make moves like a CEO, like a true chief. For over a decade, I've helped CEOs and senior executives around the world boldly lead change, inspire their people, and leave a legacy. On the Inner Chief Podcast, I bring these stories to life with deep diving CEO interviews, interspersed with minisodes covering key leadership challenges, so you will find your own path to greatness as an executive. In this episode, Chiefs, I chat to James Schofield. James speaks the language of investors. Over a 25-year career in capital markets, he's advised from both sides of the table. First, as a top-rated equity analyst with Merrill Lynch, UBS, and Deutsche Bank, and now as the founder of Insight Investor Relations. Since launching Insight in 2018, James has worked with NZX-listed CEOs and CFOs across companies valued between 300 million and 3 billion. His team is trusted to design and execute investor relations strategies at pivotal points in a company's growth story, with their clients' aggregate market value more than doubling to 10.8 billion over the past 12 months. James and his team also help founders raise between 2 and 15 million in capital through leveraging investor-side language and insights. In today's masterclass, James will share the right time to pitch and raise capital, and when not to, how to position your business to attract investors through clarity, credibility, and consistent messaging. Why founders should treat investors like customers by understanding their needs and motivations, the 5 P's of pitching for investor success: purpose, product, proof, playbook, and promise. Chiefs, without further ado, let's hear from the remarkable James Schofield. Righto, Chiefs, I'm here with my good friend James Schofield, founder and director of Insight Investor Relations. James, welcome to the Inner Chief Podcast.
Yeah, thanks a lot, mate. Great to catch up again. And it wasn't too long ago we were on a beach on the Sunshine Coast. So
all great podcast ideas come from bacon and eggs on Noosa North Shore.
It was a great bacon and eggs, and I've got a great photo as well, which we could drop into the show notes.
We should drop that in, yeah. Of cooking bacon and eggs and using a purple boogie board as our table.
Yeah. And a bit of boogie board for wind protection as well. There was a little bit of wind that time. So, it was quite a high-tech setup.
Yeah. Righto, mate. People who don't know you just yet, we have a great tradition at the Inner Chief. We love to know where our chiefs come from. Can you just tell a little bit of a story about your childhood and early life?
Yeah, straightforward childhood, early life. Love school, love sport. Bit of work as well, which progressively got more and more. I spent a lot of time with my grandfather. My parents would go overseas for quite a while, and at the time my nana was around as well. But my grandfather's been an important part of my life, but it was I was sort of reflecting, I've got quite a technology interest. I spent a bit of time with startups and founders, but yeah, during the times I was with him, he was already retired, but had a real love for technology. So he was one of the first people in New Zealand to have an Apple Mac. He was always the first person to get the iPhone when it came out, and he must have been pushing that late 70s by the time iPhone was on the scene. And thankfully, he's still around, so he's 101. So yeah, nowadays I'm sort of introducing him to AI, etc. I do think his tech adoption has sort of slowed down after hitting three figures, to be fair, but certainly well into the 90s. But yeah, no, technology I've always loved. So I think some of that came from that. And also my father was, reasonably advanced in that space as well. So yeah, it's been, childhood was fun. A lot of time with mates, etc. And yeah.
Wonderful. And what was your first ever paying job?
First ever paying job was a lot of factory work, nothing so exciting. So doing a lot of shrink wrapping of cardboard boxes, for example. But it was interesting. I think I quickly worked out from that what I didn't want to do, which is, manual labor in factories, etc. So I think that really taught me the importance of gaining skills and really leaning into stuff like education. So first paying jobs were reasonably boring, but probably the most transformative early job I'd say was when I was at varsity, got a job selling cookies, which is quite a time-honoured tradition in New Zealand. It's still going, the company Cookie Time. They get a bunch of students, they hit the street in the summer, they sell these Christmas cookies, but it was door-to-door sales. And if you've ever done that, that is really character building and a great chance to just try stuff, see if it works. And most of the time it doesn't. And then you eventually learn a pattern. So it's pretty cool.
Wow. Yeah. Door-to-door cookie selling.
Yes.
That is a first on the Unit Chief.
Yep.
As well as shrink wrapping. We haven't had that one either. You're an original, James. This is great.
There you go.
This important question is your first ever car.
Yeah, it was a very legacy. So that it was a all-wheel drive, and it was fantastic. Station wagon, handled the open roads well. I think the longest trip I did on it was Christchurch to Auckland, which is, it's a very long drive. And by the time I got to Auckland, after going over the Cook Strait ferry sometime midday, so I eventually arrived back in Auckland at about 10 o'clock, but it was kind of like driving in a Simpsons episode where Homer is driving along and he starts seeing a bed next to him, etc., with the other cars. So it was a bit like that. I was hallucinating by the time, but it was a great car. Also used to go up the roads nicely in the South Island. And Hannah, who's become my wife, we did some great road trips in that car. So yeah, very special.
Road trips, South Island, New Zealand, one of the best things you'll ever do.
Yeah, I know that's a place dear to your own heart, right?
Yeah. Okay, mate, let's talk about business growth, growing pains, how to pitch your business and raising capital. Your background early years was really as an equity analyst in the big investment banks, Merrill Lynch, Jarden. So you've got this history of really trying to understand what makes an organization or a business tick. Before we jump into that, I think a lot of people would really love to understand what on earth does an equity analyst do? How do they go about it? When you're looking at a business, what are you really looking for?
Yeah, I mean, to answer that reverse order, ultimately what you're looking for is this a good investment? So it's kind of the starting place for when you're an equity analyst, and it's the starting place. We'll probably move on to some of the stuff we're doing now, but it's the starting place for us as well. Now, what is the investment case? And in terms of what an equity analyst does, people are probably most familiar with the very long reports that are sort of recommending buy, sell, or neutral recommendations. So, those go out into a variety of different channels, and most importantly, institutional investors who are clients of the investment bank or broker. But they'll also often find themselves into media, etc. But it's just a really informed view, which is after a lot of time and with CEOs, CFOs of companies, you formulate an an investment case on the company. And a lot of detail goes into that, including financial modeling. And what pops out of that is these notes, which, to be honest, became really, really long, which is why I don't do equity analysis anymore. But yeah, it's essentially why a business will succeed or fail against its objectives.
And then the institutional banks or brokers will potentially invest millions or not in that organization. So the importance of these reports can't be underplayed. So that professionalism and the detail around building that out is really, really important because that's credibility for you. But then on the flip side, and this is what I think now the area you play in now is, how do you present your business as a CEO, as the owner, as a senior executive in a way that is attractive? So when an analyst or someone who's giving you credit or a shareholder or even your current owners, how do you present something that says, hey, this is a great business. We're on a good trajectory. We're going to give value. This is a good business. And now you sort of spend a lot more time working on the client side, interacting with the market.
Yeah, like it's just, with anything with convincing, I think, or influence, it's understanding, walking a mile in the other person's moccasins. It's understanding their viewpoint on life. So I think the biggest thing is to understand their perspective. What are they trying to get out of this? What are they looking for? So when we're coaching founders or CEOs of companies, it's helping them understand what the day job looks like for the investor. What are they looking for in an investment? And then you somewhat reverse engineering that. The other thing I would say is, like any communication, it's all about clarity. So for us, it's about simplifying the message and really boiling down what the essence is. And we love to almost land on one word. So we're sort of going from enormous detail to 5 themes, and then we'll almost try and land one word, either for a company in terms of investment case, or for a result or an investor day, or whatever the form of communication is for a pitch. Like, what is the one word which sort of emulates everything about a business?
Yeah. And I think it's important for founders, leaders, CEOs, shareholders to understand just how competitive this is. So in one industry alone, like I do quite a bit of work at mining. I know you've got a bit of a history in resources and exploration, things like that. There is a mining conference near me called the Noosa Mining Conference. And it's all these junior miners that have exploration tenements. And essentially they're getting up to say, hey, this is what our business is. They get about 15 minutes. And over basically a 2.5 day, there must be at least 60 companies that are vying for that dollar for investment. And so if you think about it from the investor side, there is just so many options, like hundreds and thousands of options. It's the same as if you're trying to sell to a customer. And I think that's the way to think about it, is you're trying to sell your business here.
100%.
Right.
Yep.
These essentially are, in many ways, your customers. You're trying to get them to give you money, right?
Totally.
One part's money without a bit of thought, right? That's the end of it, right? I'm going to give you some cash. I want a return.
Exactly.
Right? Someone gives you some cash. I want a product or a service. It's the same kind of thing. So I remember sitting in this mining conference, first time I ever went to one, and I sat down, I watched the first pitch come out, and I went, wow. I was sitting next to, by the way, a broker who was a very good friend of mine. And I said, wow, these guys are amazing. And he goes, sit tight. And I watched the next one. I went, hey, these guys are also good, man. Get the light out, and then it was like one after the other. And I went, oh. And I watched about 8, and I said, which one would you go for? And he goes, none.
Yeah.
Wow.
Yeah.
And he said, there's all these other things going on around them that I've got to consider. And I just thought that was really quite fascinating.
I mean, investors, they've seen it all before, and it's like anything. It's muscle memory when you go to the gym, etc. It's repetition. And the thing about investment is they've all been lied to before, the investors. They've been disappointed before. So you end up with an extremely, and a lot of them are mates, in terms of institutional investors and VCs, PE, but they end up being quite cynical, and it's for exactly that reason. They're looking, think of it as a filter. And to your point, I mean, capital markets are incredibly competitive, and there's a ton of options. There's, thousands of companies on certain public exchanges. There's millions of founders trying to raise capital, etc. So I think you're exactly right. We always talk about what we do in investor relations and capital raising as it's sales and marketing for a really niche audience, which is the investor. And we really understand we speak the language of investors. We really understand where they're coming from. But ultimately, the best thing a founder or a CEO can do is have respect for the investor. And Greg, you and I, we met through Turner's Auto, and Todd, the CEO of that company, one of the most respected CEOs in New Zealand. He is fantastic at this because he really truly respects the investor. He values their input into the company, etc. So it's that genuine respect for capital, because capital has so many different options. So you need to woo them. It is sales and marketing. It's kind of like me with me selling my cookies. I need to understand where the customer is coming from. Yeah. And I think you sort of touched on it, but I find CEOs and founders, they are really good at that, often with other stakeholders, like their customers, but they need to treat their investors like customers, basically.
Yeah. That's really smart. Now, James, you actually have a trust model for how to build that relationship. We're going to get to the heart of how to build trust with investors at a future episode, because today we really want to focus on three things: the growing pains, pitching your business, and then raising capital and then spending it. Right? So I just wanted to talk to you briefly about growing pains. Why do people go to the market? Well, they want to grow.
Yep.
Right. That's what a lot of this is about, right? So when you just go back to your equity and analysis days, your client base now, and you think about an organization or a business that's coming on, could be small, could be medium, they might be listed or not. What do they need to do in order to mature and then sort of build an ecosystem that creates sustainability? Because what we're looking for is good, dependable, sustainable kind of business. It's not up and down like a yo-yo where trust gets eroded. I know that's actually quite an enormous question. Now I'm at the end of it going, oh my God, this could go anyway. But maybe just a couple of things that you think are really important.
Yeah, like, I mean, the obvious place to start is people. I mean, at the end of the day, there's very few businesses that, don't have a material impact based on the people they bring into the organization. Maybe property might be slightly exceptional there, but even there, we've seen such different outcomes for various listed property companies, etc. And stuff like site selection and how they manage tenants is extremely important in decision making for capital allocation. So I think at the end of the day, it is predominantly around people. I've been fortunate enough to work with fantastic businesses early on in the technology space. And obviously that is a very people-oriented business, because ultimately the laptop doesn't cost that much and it's not that much of an asset. It really is about the IP and the people. And I was fortunate enough to be the first analyst to cover Xero, the accounting platform in the world. And it was really cool that founders actually used my research to recruit a couple of directors up in the US. But they had a great saying, which was, and I've seen it much more now, 12, 14 years later, that A's hires A's and B's hire B's, etc. So they had a real culture of landing the big hires first, and they probably overinvested early days in that. But, the success speaks for itself. It's now arguably New Zealand's largest business. I say arguably because it depends if you include our rocket company, which is technically a US company now, but New Zealand actually has one of the best space programs in the world, would you believe?
Really? I did not even know that.
Yeah. Rocket Lab, it's a fantastic company, but different story. But again, look, Rocket Lab is Peter Beck, the founder, incredible, great New Zealander, but the people he's brought into that organization, absolutely incredible people, obviously literally rocket scientists, but the number of people now coming out of that organization and spinning up their own startups. One of New Zealand's most successful startups, Halter, which I could get into, but it's basically remote controlled cows, because it's got a collar. So it's a classic New Zealand agri-tech, but you can move cows around the farm. And Craig, the founder, has got a great story of a dairy farmer who operates his dairy farm from Bordeaux, for example. But where I'm going with that, Rocket Lab, fantastic people story, ultimately. So I think that is the biggest thing you've got to get right, because where that goes wrong, of course, on the inversion side, we all know how that ends up for startups or mining companies, etc., when you don't have that right team.
Yeah. I think you said something there before, like A players hire A players. And it's really interesting. I'll often be working with a client and I'll be saying, hey, how many of your B players, like, second string, how many of them have ever hired an A player?
Yeah.
And they'll almost, well, never, that sort of never happened. And an organization needs, like there's one of the measures that we use when we go into organizations is, do you have grunt power in key roles?
Yeah.
And what we're sort of saying is, imagine your business is sort of on the side of the mountain. We've got to lift it up and take it from one peak to a new peak, which is above that.
Yes.
That's the growth story. That's the new maturity, the systems, the customer acquisition, all that. And if you don't have a coalition of the willing, so to speak, who are good, and they've just got a V8 power in their brain, they've got capacity, they've got energy, right? They've got grit and resilience. They're ready to go, because they've got to energize a whole bunch of people, and they've got to attract a whole bunch of clients. And if you've got one person doing that lifting, or one person with a bunch of B players, the lift is not going to work.
100%.
And it's certainly, you and I have probably been into, I don't know how many companies between us, but it's certainly in the hundreds.
Yeah.
And how many times have you gone, this ain't going to happen?
Yeah. Just doesn't feel right. I think the other aspect is, what's an A player? It actually depends as well on the stage. Like what mountain are you climbing, how far up are you, etc. And I think these different people are good at different things and at different stages. So it also has to be age appropriate. And one of the other things I've learned through successful startups, I mean, we know some really hugely successful founders who say 0 to 100 million people, for example, but they're rubbish at over 100 million. The founder of Xero, there was probably a point where he realized himself that he wasn't the person to take it, because he gets bored of, the kind of bureaucratic nature or some of that bureaucracy that needed to come into the organization at a different stage. But I think it's really important that you need to understand, like, you're going from X to Y, and what you need to attract is people who've gone from X to Y beforehand, and they have experience on that, and they've crushed that stage of the growth curve. I think that's really important.
I was chatting to a client the other day, and she is on 9 boards, and I asked her a question. I asked her, basically the question that you were just sort of talking about now was, how many of the advisory board or board, whatever kind of board they had, how many of them were fit for purpose for the stage of the business they're in?
Yep.
And she said only 1 out of 9. So 8 boards are not matched to the current business cycle.
Yep.
And that might be how much revenue they're trying to grow, or are they in early funding? And does the board have some sort of experience in this particular problem set?
Yep.
And she said, 8 out of 9 were no.
Yeah.
Right. And often it's the same when you come down a level in the exec team. Does this exec team can they do this job? Because what I have seen at times in the mining sector is a business that is in exploration mode, and they go through this process called exploration, and they've got to get permitting, and they've got to build a mine. This process can take a long time, more than 10 years. It's a very different stage of cycle to actually operating a mine. And I remember working with a client where none of the leadership team had ever built a mine and never been through that process. All they'd ever done is operate. And so they just didn't know what was coming next.
Yeah.
Right. And it sort of really got in a tricky kind of position, because they couldn't keep up, and more time pressure was coming on. And so the more we get the right people in the room for the stage, I think you can have a much better chance. But the grunt power, which is that brain power, capability, grit, resilience, capacity, you need a few big minds.
Yeah. I'm familiar with very similar industry, the oil and gas industry. I covered it as an analyst, exploration, production. Ton of the London listed explorers, they were in Africa exploring. But yeah, again, such different people between the explorers and the producers. Totally different skill set, right? And
different characters.
Even like one of the most successful companies of the time, Tullow, great explorer, more challenging in the production phase when it became much more of a producer in the intermediate ones that outgrew the junior stage.
Chief, do you want the ultimate resource to help you influence stakeholders, the good, the bad, and all in between that are costing you stress and results? Go to chiefmaker.com/stakeholders, and there is a comprehensive PDF there with tools to map stakeholders, build profiles, and plans to engage them and influence. That's at chiefmaker.com/stakeholders. Okay, let's talk about pitching to the market. And this is about raising capital. Why don't we just take a bit of a step back actually here? When should a business start pitching to the market to raise capital, and when shouldn't they? Because I sort of feel like this might be a really common problem. People go to raise capital at the wrong time.
Yeah, I think it's two different things. When should they pitch and when should they capital raise? So from a pitching perspective, we'd encourage people to pitch always. The best founders we see, they're just constantly pitching. It's one of the first most important aspects of being a founder, because you need to pitch for recruitment, suppliers, for customers, and ultimately for capital as well.
Listed or not.
Yeah, listed. Particularly
be telling the story.
Yeah.
And the value.
Yeah, because I mean, absolutely. Founders are literally pitching the business into existence. So it's one of the key skill sets. And, the best founders I've seen are great at pitching their business. It's not hyperbole, it's not over the top, but they're just really great natural pitches. But on the capital raise side, we'd encourage them to, again, start early, start 6 months, 12 months out. One of the best stories, we've got a fantastic growth company, Traxo, which will be one of our next unicorns in New Zealand. But speaking to Connor, the founder there, he literally interviewed his funders in terms of what are you going to bring to the table. So it's kind of like a reverse pitch, but it was because they started really early telling their story. So by the time an actual capital raise came around, they were able to say, what are you bringing to the table? What doors are you going to open, and then prove it? And they basically selected the ones who brought the most. But because they started early on the journey, taking everyone on their journey and creating something that was completely oversubscribed, and then where literally when new VCs were trying to get into that deal and like fighting tooth and nail to get into that. So yeah, that's where you want to go with pitching. In terms of capital raising, should you go? We've got basically 3 rules on that. Go early, go from a position of strength, and have a great reason. So the go early means don't wait till the last minute. Don't wait till you're desperate. That's a pretty clear one.
Yeah.
Go from a position of strength means, when you've actually achieved something and you can show that you're on that journey to massive success. So waiting until you've actually got a few milestones, which are confirmed, and then finally have a great reason to raise capital. Sometimes you see companies, they're offered capital, but should they really take it? Well, if they don't need it, don't take it, right? You've got to have a good reason. What
are the main reasons people should raise capital? And is there any that maybe they try and raise, but they just shouldn't?
Yeah, we're often telling founders to defer capital raises. Like that's probably doing ourselves a disservice. But the reason is they haven't achieved certain milestones yet, and they're better to just keep bootstrapping or keep running out the cash runway until they actually achieve and have enough proof in the bank to actually take to a capital raise. Going back to the question in terms of when you should or why you should raise capital, I always say the simple way to think of it is it's an accelerant. So it's when you want to bring forward a time frame in terms of it would take a lot longer to fund that through customers in terms of revenue. So what it does is it actually brings forward, say, for example, technology. It actually brings forward your development so you can have a great technology to launch. If it's a very competitive space, for example, or it's a moment in time opportunity, like what we're seeing in AI is people are gobbling up capital so fast because they need to build so fast, and because it's a moment in time and the development is really getting compressed. So it's basically speed is the main reason I say.
I just want to go back to the other thing is that you mentioned like once you've got some runs on the board and you've achieved something, can you just explain almost from a financial perspective, if you're a listed company and you want to raise a bit more capital, it's because you've got a higher share price and therefore you're giving up, less shares, so to speak, if you're giving away shares.
Yep.
Can you explain that just so we really understand why is it better to almost have a high valuation or a business that's winning?
Yeah, basically, if you think of say a valuation, which is essentially a share price, if you're a publicly listed company, that's going to go up or down minute to moment. If you think about it as currency, it won't cost you much of your equity to raise. If you're raising $100 million, if you're valued at $200 million, it's going to cost you a lot. If you're valued at $10 billion, that's a very small part of your company. So you're not giving up too much. You're also not diluting your investors. So the worst is you do a capital raise at one price and then the next year you're at a much lower price. You're really diluting your existing shareholders. They're not going to like that. It's not shareholder friendly.
Yeah. So let's go forward. We pitched well. We know we're making the right decisions about when to raise capital, either through debt or investors or something like that. What's the first step, the most important thing that they do when the capital turns up? We're operationalizing the capital now.
Yeah, it probably predates that, which is have a plan before you raise capital. One of the most important slides on any pitch deck is use of capital. So good founders, good CEOs, they should have already decided exactly where that is going. And then it's just a case of deploying that, keeping your investors up to speed with how that deployment of capital goes and reporting back to the market or reporting back to your investors if it's a private company and kicking them in the loop and taking them on that progression to whatever your strategy or milestones are.
So James, when someone is pitching to the market, do you have some sort of a framework or what they really should consider in order to get it right?
Yeah, most founders are asking us for some sort of framework. So like any good advisor, we came up with a catchy alliterated model. So we've got the 5P model for pitching. Handy as well that pitch happens to start with P. The first one is purpose. And so there's two reasons for the purpose. The most common form, to give you an idea of, like we use eight different archetypes for purpose, but most common one is problem solution. But what you're looking to do there is really establish the big picture and also align with the investors. And particularly in the sustainable space, we see that alignment is so important with impact investors. The second one is product. This is super simple. It's just what do you actually do, or what does your technology do, or whatever it is that you are raising capital for. The bizarre thing about it is time and time again, particularly when we're at pitch competitions, that is completely overlooked by founders. And the number of times it's a running joke with you will be sitting next to a VC at a pitch contest and do you know what these guys do? And no one can work it out. So that's a common mistake, that one. It's where you have it in there.
Wow.
Third P is proof. So that is the very concrete stuff, and it's backward looking. So it's up to this point. What have you done? How have you shown traction? So backward looking, and we talk about the kind of rhythm or picture of a pitch. So you're actually starting quite high with purpose, then you're going down into this proof, which is very concrete, very grounded. What have you achieved? Why is this the right team? Why is this the right solution, which is going to work? Because ultimately, everyone has a big idea as a founder, but very few things work. Or as a VC once told me, when I was 7-year-old, I thought I was going to be Superman. I had a big dream, but it didn't necessarily come true. So it's really important to prove that you can do what you're setting out to do. Fourth one is more future looking. It's again proving that you can do something, but it's future looking. And that's what we call the playbook, the fourth P. So how are you actually going to do it and in which sequencing? And that's super important because I'm going to give you money as an investor. I need to know that you have a plan for my money, which will achieve an outcome. Finally, promise, and this is when we totally lift. We've already gone up a level from proof to playbook in terms of the choreography of the pitch. And then we go into promise, which is what is possible. How big can this get, which is what investors are looking for. Return on money, how many times money am I going to make? So it's what's possible, what's the size of the market, how big can this get, what are your projections? So we deliberately finish on that. And then finally is the ask, which is what are we actually raising, how much, what are we going to use it for? So that's essentially what a pitch looks like.
Yeah, just running my head, like auditing businesses over the years. I think about all the companies I've worked for, how many have been able to do those 5 Ps clearly.
Yeah.
It's actually, there's actually not that many. So interesting to me because they are so clear.
Yeah, and it does actually work in a number of aspects as well. We originally developed that for the capital raising side of our business, but we're actually using that really effectively with our big public companies. And actually, even the other day when you and I, Greg, were working with that client in Sydney, bizarrely, it actually cuts through to some of the stuff around culture as well.
It's sort of the other, when we'll talk about the trust model in the future episode, but it's sort of, it's a foundation of a lot of that, isn't it?
It is. Yeah.
Yeah.
The foundation is strategy, actually, as well.
Yeah.
All those things need to be lined up. And essentially, with a pitch, you are selling your business, ultimately. So all those things that make a good business need to line up in a pitch.
Have you ever seen the capital allocation and then that whole process go quite wrong? Is there any learnings other than what we've spoken about? Like, are they just not following the plan, or just trying to think about when? Because goes back to that bit at the beginning. When, if you don't get this right, you lose the trust of the market. You might not ever raise capital again. And and it's you. Like, they're not looking at the business; they're looking at the individual in the seat, right?
Yeah.
This is the real thing. It's an individual that builds trust with the market, not a company, so to speak.
Yeah, I think probably the biggest thing we've seen historically is the capital is used diffusely, but it's, you'd be very familiar with this, from a leadership perspective, just the scattergun approach or the trying to achieve too many different things for that particular stage. So, oftentimes we're seeing capital come in, it's sort of shotgun approach. And then it's a lack of focus and a lack of team focus. So there's actually oftentimes you see very well-funded or overfunded startups can fail massively because they start trying to do everything. They get the gilded offices with an injection of capital and they just burn through it so quickly. So I think you just have to have that very focused capital allocation, but you also have to have capital discipline, a strong CFO who actually keeps the reins on things, because stuff happens, pandemics happen, you need a backup plan and a backup plan on that. You need buffer. I think buffer is an extremely important word. And because, the number of times I was just speaking to a potential client this morning and they're on the crux of major enterprise deals, which would, tenfold the company, etc. You want to have buffer because we all know enterprise deals, whilst they're sexy and massive valuation unlocks, they always take longer than what people hope.
Yeah.
So you want to have that nice long cash runway. There's so many layers to these larger enterprises, and they call them startup killers for a reason, right? They're the best thing, but the worst thing. We always advise people, hedge your bets, go for that, do the whale hunting, but at the same time, get yourself some medium-sized customers as well, because at least you can fall back on that and they can actually fund you a bit. One of the most overlooked sources of capital is customer funding. It's just basically making money on the way through. And then also, we've seen a number of successful startups as well actually get lines of credit or even an equity stake from a customer. Again, that can be a good, bad thing, because it also does mean they can take control of your roadmap in terms of your product development, but it's a very overlooked form of funding.
I imagine that little line there, you said there is a common fear of founders and CEOs, is that you raise capital and someone starts to steer your ship in a direction you don't want to go.
Yeah, 100%.
How do you deal with that?
Can you not deal with it up front? Because the thing about funders is funders and founders. It's a very long-term relationship, particularly in the private space, because there is no liquidity. So you're getting into bed with someone for 10 years. It is a relationship. It is something that you really need to think about upfront. So the best time to manage that is upfront. So we always try and go for very oversubscribed raises, because one of the most overlooked things for founders is the need to choose the right investor, investors who unlock doors, bring skills to the table, and almost most importantly, someone you actually want to hang out with for 10 years. So I think a lot of the trouble can be dealt with up front. But, we're talking earlier about venture capitalists, for example. He's good in venture capitalists, he's bad venture capitalists. And there's been many a startup killed because the VCs are playing a very different game where they have a portfolio of investments. They're looking for the 1,000 times return on money. So they're wanting you to blow it out of the park on a global stage. The founder has to be up for that. And the good funders, the VCs we like, know, and trust, they are very cognizant of that as well. So they're looking for the right founder who match their aspirations. So where it goes wrong is where the aspirations of the founder and funder are different.
Absolutely. And I see that with my clients actually quite regularly.
Yeah.
And it is so incredibly stressful.
Yes,
Because a lot of those funders end up getting a seat on the board as well.
exactly.
And we had a lady on the podcast, it'd be 7 or 8 years ago, that lady called Isabella Noosley, a Swiss woman who studied the relationship between CEOs/founders and board chairs.
Yes.
And like thousands of companies, I did this survey, and 70% of board chair relationships are strained.
Yeah.
70%. And people are like, wow, really that much? I'm like, yeah, actually, when you're up there, that's what it looks like.
Yeah.
And when you get a CEO who's got a great relation with a chair, they just walk so much more lightly.
Tuner's Auto, who we know well, that's how we met, Greg. And I was with Todd yesterday, actually. But, when you're around that board table, and we're fortunate to, get into quite a few boardrooms, but that dynamic, my God, there's so much support from Grant. Grant's been there. He's an entrepreneur himself. He's been an extremely successful entrepreneur. So the match and the support that Todd gets from Grant and the respect they have for each other is just such a different play than, we're fortunate enough to work with a number of great boards and CEOs, but it's not always the case. And we have seen some strained relationships in the past, and it can go really toxic because you've got a handbrake on the company. Yeah. If you have an enabler and someone who pours petrol on a good fire, that's what you want. You want those skills. But again, it's that relationship. It's the people fit, and finding the right alignment is just so important.
I think you're so right, because the other thing that I've seen quite a bit is if you have more than one investor, but they're not aligned.
Yeah.
So then you've got multiple investors that aren't aligned, and then a business, and potentially a CEO is not aligned. And it is so distracting for the business that they lose focus on core business, and eventually it becomes a bit of a slow moving train wreck that sort of everyone can see it coming, but nobody really will make a move to fix it.
Well, you got to make sure it's like any very important purchase. You got to do your due diligence, and again, that's got to be one of the most important relationships. So important to get it right. We see quite a bit in the listed space. You see a dynamic when you have a share price sliding, because of course that happens very dynamically. That can happen within a week, within a month, even quicker. It is so different when you see a massive share price drop. The dynamic around the board table suddenly shifts so much, and then the focus for the business can really go out the window, and it actually gets in the way of execution. Everyone with best intentions is trying to solve the problem, but quite often we can see that compounding the problem.
Exactly. And I work with a lot of clients maybe coming out of a bit of a turnaround. So coming in, they've had a bit of a share price drop or a valuation drop, or their business is just tanking, and getting an alignment on the way out, because all of a sudden everyone's stressed.
Turnarounds
Everyone's
are tough.
worried. Reputation, maybe they've lost money individually. This is a really challenging way, and getting back to what is core business and what is the value prop here that we're going to really drive in the business, they take some hard, bold calls. And, and I think if anyone's ever in that kind of position, something you and I have spoken about as well, like if there is this mismatch between the board and the cycle, the stage, board members need to ask themselves a question: am I the person to help get this business to the next stage? Because I think there's quite a lot right now that it's just not a fit. Like they're not adding value other than an oversight piece. And I think as a board member, if you're going to take on that role, oversight, sure, governance, yeah, but add some more value. And if you can't add value, then in my opinion, find something else to do.
Yeah, no, it comes, again, it's sort of that trust framework, because it comes from a place of mutual respect when you say go right. And obviously we saw everything stress tested during the pandemic, and you could see in real time, governance and executive and leadership in terms of, was it aligned, was it not aligned? But a lot of that was to do with dynamics preceding the pandemic, and whether there was that trust, respect, etc. And the so different the outcomes from that point, from that inflection point, so different. Depending on how that dynamic was going.
Chiefs, more from James in a minute. Now, recently we continued our best of series by featuring former AFL head coach and former England rugby high performance manager Neil Craig. We spoke about creating high performance environments, getting clarity on your North Star, and decision making under pressure. Here's what Neil had to say about a pivotal realization in high performance.
So they walked out, and my initial emotion was, well, how dare they come in and talk to the senior coach like that? Well, I'm the senior coach here. But once the emotion dissipated, I started to think, well, one is, how good is it that they feel safe enough to come in and talk to me about it? How lucky am I that I've got a senior leadership group that are prepared to have that trust and come and tell me about it versus not talk about it.
You can listen to that incredible interview with Neil by going to chiefmaker.com/373. Righto, Chief, let's get back to James Schofield of Insight Investor Relations. James, mate, this has just been fascinating, and if I'm honest, I've got about 40 more questions. But what I really want to reinforce with the listeners is we're going to come back and do another episode down the track. We're going to talk about that trust model in a bit more depth. I'm going to create a few resources for people online to come and check you out and connect with you. I've seen James in action, and it's just wonderful. Like what having someone like James on your team does is gives you this great strategic clarity. It's a really great sounding board. Like, will the market like this? Will this work? So I think everybody needs someone like James in their team. So James, look, we're going to wrap up this little version here, episode 1, which was just all about this growing pains, when to pitch your business, raising capital, spending it. And I know people have got a lot of value. A few rapid fire questions to finish, right? We put everyone through this, mate. So you ready?
Yeah, I prefer I do that in terms of the listeners as well. I mean, we've had the good fortune to work together. Where we've done that is a couple of executive offsites. And I'd say it is amazing the difference Greg makes. So the feeling's mutual. I've seen executive offsites, which are just nowhere near as good, but the value Greg brings to the table in terms of everyone being able to turn up with their A game and get really, really clear on some chunky business challenges and opportunities is just phenomenal. And everyone around the table, myself included, we were able to really get the right answers. So it's been great working with you.
Yeah. And obviously the most important thing then is doing some really good, sitting around a campfire or a fireplace somewhere, drinking a good beer and a good red.
Yeah.
And doing some desert island, some great music. Yeah. Remember walking through Arrowtown, a little town outside of Queenstown, freezing cold night. And we had a speaker on our shoulder as we played. I think it was God Gave Rock and Roll to you.
Yeah. Just to remember the moment. Yeah, very cool.
Yeah. Excellent. Okay, mate, let's get a couple of rapid fire questions to finish. Has someone ever given you courageous feedback from the heart? Feedback you really needed to hear at that point, but maybe you hadn't heard? Has anyone ever done that to you?
My wife, Hannah, gives me courageous feedback on a daily basis. A very, very strong one, and he's incredibly talented. So, yeah, I get a lot of wise counsel, Greg. Hannah's got an amazing backstory that and a very strong, resilient character. So, amazing.
Yeah, she has an incredible story.
Yeah.
When you're working with a business to work out their pitch, what's your number one question?
Why should someone care? Why should someone invest in us now? What if you're at a barbecue? How are you convincing someone like your mate to put money into this? Because often it's the simple stuff. We find particularly with technology, deep tech founders, etc., they can get hyper complex, but ultimately it's the hearts and minds, simple stuff. Even with professional investors, that's what moves them.
I quite like selling it to your mate because no one really ever wants to let down a mate, do they?
Correct. Yeah, as well. 100%.
Yeah. What's your number one book recommendation?
I'd probably go Essentialism by Greg McKeown. Fantastic author. I love the simplicity of it. And ultimately, I think everything in life, you're trying to reduce it down. Life can be really complex. I love that because it also, Hunter and I believe in integrated life, which is both business and life. And I think that's one book which covers so many of the important things in terms of life and in business, work, relationships, etc.
Awesome. I've got a question from the audience. A guy called Todd in New Zealand sent this through. He said, "Who's your number one client?"
Oh, Tiernan, yeah.
And then he had a second question.
Nice.
He said, "What is it like working with your wife?"
Oh, yeah, it's great. It's great. Hannah's shouting out from the next room. She's
in the other room.
Yeah,
almost poking her head around the corner.
It's good. It's great. It's really good. I'd say it would depend a lot who your wife is. I've got a great wife, so for me, it's really good. Yeah. Also, it's very different skill sets. So I believe very strongly in yin and yang type models, and we look at things really different. And it's a classic visionary and implementer. So we're very much, and I think you're quite having met Shah, you're quite a similar dynamic as well. You too.
Yeah, my wife and I are quite yin and yang-ish.
Yep.
We work super well. Yeah.
Yep.
Can you nominate another chief you hold with great respect you think should be on the podcast?
Yeah, I was just talking to him, but Nick Lissiet, so he's a founder, CEO of one of New Zealand's fastest growing tech companies. I think he'd be super interesting because he is so funny, so full of bands, very dynamic, and also he is at the cutting edge of AI. We're just having a conversation about large language models just today, how that evolves and what the smartest people in the world are thinking about it. So fantastic topical guy, I'd say.
Let's see if we can lure Nick on the show.
Another client, one of our favorites.
Great.
I've been told to ask the question before.
Okay, two final questions, James. If you could lead any company in the world other than your own, what would it be?
Yeah, I don't know about the specific company, but it would be a technology-enabled company that coaches people around the world and has also a purposeful base as well.
Yeah, fantastic. Okay, mate, what is a final message of wisdom and hope?
Predominantly, it would be just enjoy yourself and make sure you have that integrated life in terms of making time for great things, most importantly, family, and not taking things too seriously. And that's advice I need to give myself every day as well. So, yeah.
I think you do a pretty good job of it, mate. Great job. James, thank you for coming on The Inner Chief, mate. A wonderful guest.
Thanks, mate. Really enjoyed it. Appreciate it.
Chiefs, that sums it up for this week. I truly believe that the work that James is doing is a vitally important part of business and a skill that all chiefs should understand and know and develop. The further you go up in an organisation, the more important stakeholder engagement, the more important shareholder engagement or owner engagement is. And so many chiefs are just a little bit underdone on this. So I hope you enjoyed that. All the resources can be found at chiefmaker.com/376. And if you would like to stay in touch and hear all about some of the best resources you can find anywhere in the world to improve your performance at work, go to chiefmaker.com/subscribe. Now, Chief, if you're yet to rate the episode and subscribe, I hope you'll do so soon. It helps others see the magnificent value that the chiefs and gurus bring to their life and career. So make sure you hit subscribe on your podcast app now, give it a 5-star rating if you think it's worthy, and leave a short review about your favourite episode. Righto, Chiefs, as always, remember to stay epic.